Hi, Warriors. BOE right out of the gate. BOE stands for Blake's on everything. Take it away.
Hey, good morning, Coach. I'm just going to jump over here really quick to the Sterling, and you can see down here on the data flash, the previous vote was 9 for a cut, and there's been a conversation in the chat room. I'll take you over to that after the fact. Ryan's in there right now. He's gonna be reporting on this. If there's a switch between most people are looking for 7 people for voting for a cut, and then to 2 for unchanged. If that's more like 6 and 3 or 5 and 4, you could actually see a real big, reversal and a big sell off here. So here we go. They left rates unchanged, so it's all about the votes right now. And we're wait. Oh, what?
8-1. 8-1.
8-1.
That's not dovish.
That is hawkish. Holy crap. Holy crap. But we've had a little bit of a bounce. I'm surprised not more. Why? I know Orion's going to be jumping in there. I thought that would actually be, if you had wow, that's really hawkish. How is the sterling not like just ripping right now? That's the question. I guess there's going to be more to the statement, and one of the things, like I said, that's here's the chat room of the Flownomics room, where we were, not we, I was actually discussing with, a couple of the guys in there, bank traders in the Flownomics room. It's the more of the macro chat room, and talking about what would be what would move the market. I was not thinking that. I was thinking, man, sterling, well, it is actually getting a little bit of a lift, more so than other things, but I was expecting way more than that. Would have expected us back to 130. Now I know Ryan's going to jump back in here when he's ready. I know he's reporting on everything and he's pushing everything into onto social media for us and everything else. So we'll let him jump in just a second. But Dale, I'm going to let you take back the charts, so this way you can go cover all the things that you wanted to cover today, and we'll come back to other central banks and what has happened this week.
All right, good job. Good job on the BOE. And yeah, looks like it wants to roll again. Dixie, okay, guys, so I've been trying it down here. I took some off before the Fed. Still have a little bit on. I still think there's a shot for 104.5. Ryan had great instincts about Aussie, not to buy it here. I actually think we're going to make a new low in Aussie. Okay, and what happened to my Canada? I got rid of my USD CAD. Anyway, oh, here we go. Look at this triangle. Okay, it's really held up when the dollar was under pressure. It has a chance to break out. That could take it to
Remember, we got
150.
we got the big date in April. This is
Yeah,
a
yeah.
it's a big deal coming up.
Probably going to 150, Blake. That's why it hasn't participated. It's like a night and day story between Mexico and Canada, and even USD Mex looks like it wants to retrace. But
Yeah, we were
definitely,
just in the chat room today talking about 2050, and I've been very hesitant about being on the short side all week on that dollar mex. So
yeah.
and everybody's been like, hey, should we short it at 2010? And I'm like, nah, it looks like it's going to squeeze, and it still looks like it's going to squeeze that dollar max.
Okay. US dollar yen, big reversal yesterday. We talked about it before the Fed. I think that's over. I don't think we're going to go to 51 because I think this was decided finally yesterday. Okay. And now we're starting to break down on the 10-year. And, if you just take the measured move of this, takes you down to about 370.
Did you
You
look
know,
at 2-year yields yesterday, Dale?
no, I didn't. They
I mean,
plunged.
10-year barely even moved, and
Okay.
the inversion just flipped, and you should see the 2-year. I mean, it just went absolutely crap the bed, and it continues to crap the bed today. So yeah.
Okay. TLT looks like it wants new highs. I don't know. Could it fail here? Um, I think the bonds are smelling or concerned about the economy. I think that's the one thing that uh, Paul gave away yesterday was, um, a little bit worried about employment, although he did poo-poo consumer sentiment. He says, yeah, they all poor mouth and then they go out and buy a new car. I think that's how I heard it was spoken. S&Ps, okay. So called the eclipse low before it happened. Okay, so we're kind of grinding up here. So this kind of feels corrective. I thought we'd rally into next week. I thought we'd rally into OPEX to take away, claw back some of the put premium. So they have another day to do it. Uh, you know, it could terminate at any point, but because April 2nd is still, over a week away, we could probably still rally. We didn't quite even get to 38% yet. So to me, it's not a matter of price, it's more of time, and it's more towards the middle to end of next week, I think, be about a 10-day pause from the relentless decline that we had, which was a matter of a few months. So a couple of weeks, you have time corrections, and you ought to think about playing around with it because, you just look at a move like this, right? And you figure out how long it was. And then you figure out what would be, say, 38% of that in time. Or 50 or 61.8 in time. But I usually look for 38%. Okay, because the dominating trend should have have the bias. So that's that. And gold. Okay, I'm not saying it topped because even though it is a pretty glaring divergence, it's over 70. I could see a scenario where we come down for a little bit, but the next pop, if we make new highs and we're under 70 in gold, I'm going to be on it because I still think the gold silver ratio is peaking here. So during a correction, I think gold's going to be the preferred short rather than silver, even though silver's been acting kind of crappy the past couple of days, but this could just be corrective too. We still haven't made new highs. I'd be surprised if we don't take out that prior high, which is up here about 34.30. But a little bit of a reversal week. I have a hard time being short up here. If you're nervous about waiting, yeah, it was a great trade from 32, from 31.80. So, could always book something. Commercials are thinking lower, but they have deeper pockets than I do, and probably most of you. So they can be early because I've traded COT before, and they can survive both price and time for quite a while. But it's going to, if we do get up there, I think that could be the beginnings of a broadening top. Where and it screws traders up because every time it's at the top, when people are getting bullish, it pulls back. Now, then it could rally to 35, 36, and then we could pull back to 27. So it's going to drive the squeeze guys and everyone else, I think, a little crazy. But if we're down here in the summer, that's really going to be back up the truck. And I do think that if we are peaking up here, that you can see 2,600 in gold by the summer. I think things are going to get cheaper into the summer.
I agree.
Most things. Okay, so that's where I'm at. Was that you, Blake?
It
You
was.
agree? Yeah, okay. So, start getting your shopping list together, play the short side. I'm not short the market yet, but the two candidates, well, first of all, the banks are coming back, and I'll be looking at them next week, like B of A. Okay. I think it's topped. I'm looking for a failing rally around 45. And then I'm hoping Apple can hold together. Just for another day, and then we'll have an inside week, which is great. That could set up for start off higher, take out this week's highs, and then take out this week's lows, and we'll be sub 200, I think, in a hurry. So those are my thoughts going into next week. Really, the only thing that I really did was get long the dollar this week. So and warn people not to be short. Have FOMO in the S&Ps last week. So I think I helped a few people if they took me seriously. So what are you doing in here, Ryan? So my rhythm is off because we broke the whole momentum of what we do every day. So I mean, really nice feel for Aussie. Do you think that I'm getting carried away now that I think Aussie can actually make new lows here? It's kind of looking like just a little flag, and could we melt down there and melt up here?
Yeah, it's possible. And good morning, by the way. And
Good morning, buddy.
what a load of crap that was from the Bank of England. But anyway, moving on.
Yeah.
Yeah. I'm not. There's a lot of yen moves today, which is doing a lot of driving. Some of the majors. You can look at any. Well, apart from that one, which is obviously stuck in the middle. But if you look at Euro yen, Aussie yen, all the yen crosses, you're seeing some moves here that are dragging the majors down. Aussie dollar itself, we were saying about that one, the fact that it couldn't get up to test that 64 level again seems to have put the knockers on it, and that's moved it all the way down. Can Aussie dollar make it all the way down to 62 again? It's got to break through. I've got a bit of a zone we're on at the moment, sort of 60s, 80s. It's got to get through that. And if it doesn't, then it might just be another springboard for a move back higher.
Look at this reversal. You trade this a lot.
Yeah, I'm still short
that's a
this.
nice reversal.
Yeah, it's again strange moves because we had some half decent Kiwi data out, so you would have thought that this might have gone a bit lower on the back of that, but it seems that the Kiwi's dropping more than Aussie dollar. Kiwi dollar's dropping more. That's why this is going up. So again, like we look at with Eurostone, this might just be a bit of a speed move. But yeah, and there's your dollar. It's not doing an awful lot, mate. But compare that to yields. We're saying look at the 2-year yield, look at the 10-year yields. We're bang on that 4.4.
And the dollar's up. Yeah, this is going to be a breakdown right here. So I mean, this we have another leg. Maybe it's all the way from here. So if you take it from what was this, 480?
Yeah.
To here, 70. That's 350. So I think I remember 340 being a big level. Let's see, 350.
Yeah,
God,
and that 350.
Is it really the weekly? Oh, it looks. Huh. What a range. Just a range.
Yeah.
Yeah. Okay.
But even that's a strange move because it wasn't as if the Fed were dovish yesterday. And, to see such a strong reaction in yields is a bit of a surprise.
Maybe it's an allocation out of equities into bonds
Could
because
be.
people are starting to be more concerned about risk
Yeah, it could be.
and a growth scare. You know what I mean? So a growth scare, you're probably lack of growth bonds. There are some long-term bond bulls, and it sure has built a pretty good base. Um, I haven't been bullish the bonds for a while. I thought we might pull back, but look at it. Look how long we've been in this range here. So, we get back above this 94 level, we're going to go above par. But yeah, it's really tough to make calls. These are weeklies. So since this big week, we've had 3 weeks of nothing in yields.
Yeah.
So yen was at it yesterday, Ryan, and we should be looking for 140, some big numbers. Maybe that's it. I remember when we were back here. It was here. We thought we might get a head and shoulders, but this sure is kind of looking ominous. We had a chance to rally. If yields are going lower, and there might be risk off again, I can't come up with a bullish case for dollar yen. Can you?
No, like you say, and it's very difficult. There's so many different inputs coming into markets now. Okay, so we've just got over the Fed. Okay, yields are
Yeah.
down, yen pairs are down. The dollar's looking a tad strong against some of the other currencies, euro, pound, but that's a yen move. So if we just take the central bank aspect, we've got the Fed on hold, the Bank of Japan potentially moving to a rate cut, maybe the next meeting. So you've got that in favour of the yen. We're rolling into end of quarter, the turn of the fiscal year. We might be seeing some repatriation flows starting to come through, which is positive for the yen. So and we've got risk, like you said. So it's very difficult these days to come in and say, look at a currency that's moved and think, yeah, I know the reason why that's moved, because you go and you read whatever headlines, you look at the data. But
I've
it
kind
could
of
be a
heard
handful
from
of things.
a couple of analysts that the Fed is not really the big game right now. It's all the White
No,
House.
no, it's not. You're quite right.
So
It's not.
central bankers really, are almost in a way kind of powerless, and all the moves are coming from there.
What are you talking about? I thought central banks were independent.
They are they're independent from all the rules about insider trading.
Yeah, that was the biggest joke, obviously, right? I mean,
Yeah. So
yeah,
it's all the White House. Do you think that
yeah,
Trump has
but
made the Fed
wait.
irrelevant?
Let me be very clear, though. I hope nobody believes that this is something that suddenly happened with the arrival of Trump in power, right? Central
That there's
banks have,
always been collaboration
of course,
yeah.
absolutely, between them, with governments. I mean, they do the government's bidding. I mean, think of how big of an issue inflation was, supposedly, when
Yeah.
inflation was supposedly low, because it was a good excuse to do money printing, and how much of an issue inflation isn't at the moment, with inflation being, depending on where we are talking about, from anywhere between 50 to 100% above target.
Yeah. So he's really not another Paul Volcker.
Oh, no.
I knew you'd laugh at that one.
Yeah.
He wanted to be, but you know what, Steve? I want to be Superman, but I can't
Yeah.
fly. How about you? Anyway, what are you thinking in here, Steve? After the Fed, let's talk risk a bit. So we're recovering. Bear market rally before another wave down in S&Ps.
Uh, I still view the rebound in equities probably as a correction to the bigger correction lower.
Okay.
So I still favor more downside from where we currently are. At least the technical structure is still, pointing in that direction. Right.
Okay.
The dollar is back testing again today, the 104 area, since we had the 4 or 5 strong down days, and we've been consolidating during the past, what is it, like 7, 8 days. This has been acting as resistance, 104. So let's see if 104 can hold. If not, perhaps we rebound a little bit higher. Perhaps, best case scenario, we might make it up to the 200 daily
105.
moving average at 105.15.
Okay, that's where the daily is. Okay.
But all in all, I don't think that so far we've seen something that changes the trends we've had during the past month or so.
Okay. Are you a believer in the narrative that a weak dollar is no longer risk on in the U.S.?
It's too early to say that. I've, in my decent, now that I'm 45 years old, experience in the markets, not as much, of course, as you or Blake or Ryan, I've heard this story many, many times, and usually that's not the case. So I think it's too big of a statement to make already. Yes, I do think that there is a potential for that correlation to weaken further, because we've already seen this type of inverse correlation weakening. But to say that it's dead and buried, I think it's too early to call.
Okay. Yeah, I mean, today's a perfect example. Dollar strong did not bring a bid into it. I think it's bringing a little bit of a bid in. We've lifted, but if you just looked at the screen, a strong dollar isn't creating a strong
And
update.
also, don't forget that traditional correlations usually don't die overnight.
Yeah.
They usually initially weaken because don't forget that, market participants are also susceptible to the Pavlovian principle, like dogs with salivating when hearing the bell. You know what I mean?
Yeah, I thought, do you have any milk bones? You could. Anyway, okay, so good to hear your voice, buddy. Everything cool?
Everything all right in
Okay,
regards to us.
coolness. All right, good to hear you. K-Man, what do you think here while you're changing diapers in Japan? Oh yeah, you're not here. All right, anyway, let's see. Blake, it's all
Hey,
yours. I have about 8 minutes. Rohit is here with us. I know you like India charts and
yeah.
you know, DAX is why the sudden drop in DAX and ES. Anyone
Yeah, I
know what
mean,
caused that break early? Because I came in, they were about unch. I was up early.
I don't, I don't know. And Ryan, you may have some better color on why the equity markets
Lagarde,
just started selling off in the European hours.
yeah.
I mean, it was while you were on the Flow show with Michael Brown from Pepperstone. Was there anything that really caused that, or was it just, hey, look, I mean, I know I threw down an F-bomb yesterday, my mistake. But we and Steve just mentioned that Pavlovian response. When you're talking about equities, it's like everybody was long yesterday. One of the things that the Fed said is they're in no hurry to raise or to cut rates, and that stopped the market rally dead in its tracks yesterday. And but Ryan, did you see anything that came out?
Not specific. It seems to have yesterday's Fed seems to have snowballed into a bit of a risk off mood. So that's one thing. But I'm pretty much at a loss as to what's going on and what's really driving things at the moment. Stocks down, yields down, dollar and yen bid. All looks a bit risk, but then you can look at the Swissy after the SMB this morning, and that tells you a slightly different story. So it's one of those moments I can't put a finger on. So I'll sort of take a little seat.
Yeah, the fog will lift.
Yeah,
the fog will lift.
exactly.
Okay, I mean, we're always uncomfortable when we don't have a clear view. But if you just sit there, jumping around isn't going to move the fog. It'll move you. Just sit there and let it clear.
That's a good analogy, Dale.
Yeah.
Jumping around in the fog isn't going to move the fog. It's
Well,
a true statement.
Flap your arms hard enough.
I've tried everything, Blake. I've tried everything. Even the magnet on the screen. So, looking for my edge.
Right.
Anyway. Okay, so
but it's what you say, Dale. It's okay if you don't know what's going on, because that's insight in itself. If you don't know what's going on, then you need to think about that when you're trading. You can't just go, "Oh, well, I don't know what's going on, but I'm going to trade anyway." That's when you need to, be a bit protective and wait for the fog to clear.
You know what it was? It was actually the really crappy Australian jobs data last night, and then it finally hit the UK market 8.5 hours later or something. No, I'm just kidding. But man, did you see the Australian jobs data last night? Holy cow. That was crap. And you can see how the Aussie got hit and then it eventually rolled over, and the Kiwi definitely followed suit. Actually, Mo in our chat room in the Asian hours was with me last night, and he banged on the Kiwi and he hit it well. He said he took it off way early because, hey, people got to sleep. I get it. But yeah, the Kiwi is sold off pretty aggressively too. So yeah, it is one of those days where you're having a little bit I'm having a difficult time also figuring out why moves are developing. But the one thing I will state, and we'll go back to yesterday's conversation when we were here, the market bounces have been very shallow, and we're not even able to get to the 38% retracement in the equity markets. Jensen from NVIDIA, his announcements and his interviews yesterday failed to move the needle in the tech sector, which is scary. And so that's another thing that you got to be thinking about. That what typically could have juiced the market yesterday, whether you're talking about the Fed, whether you're talking about, NVIDIA comments, it's not doing anything. And the market, there's a lot of people that have been buying this 10% dip. I mean, this has been from the highs here in the S&P, a 10% dip. A lot of people buying it, expecting us back to all-time highs or, back to 6,000 or whatever. And that's not coming to fruition. So these types of shallow retracements tend to yield continuation patterns. So the bear flag pattern, if completed, Dale, gets you closer to your 4,900 target.
Yeah, Nasdaq, the exact same pattern, with the difference being that Nasdaq slipped into corrective territory more than 10% a lot earlier.
Yeah, and you're right. You're right, Steve. I mean, this looks...
Nasdaq's down twice as much, 20%.
Not twice, but it's more.
Almost. And there are multiple, and all the mags are down 20%. So argue with me there. And you know what?
I mean,
Nasdaq at the lows was 14% lower.
Right here.
It's currently around 11.5, somewhere there.
Yeah.
From the highs.
Oh, so I exaggerated.
Yeah, but you're right, Dale. The Mag 7 looks like crap. They don't look so magnificent. So
the movie was on this weekend. And
really?
Amazing
so
movie.
I thought about it, and at the end I go, well, at least 3 of them made it.
It was actually a quite great movie. What we're going to be looking for, the Django 8 is what we're going to be looking for next.
That's a good one too, Blake.
Yeah. So we have data coming out in 2 minutes. So let's go ahead and pull over our
data from
charts.
Star Trek is coming out.
What's that?
Data from Star Trek.
I got it.
Now you're only hitting a very subsection of our traders.
Wait a second. I hope it's a big one.
I don't know. You're either a Star Trek fan or you're a Star Wars fan, and I happen to be on the other
You can be
side.
both, actually.
Yeah, I don't mean a lot of
Steve's
those,
by.
I'm by in that respect. Yeah.
All right, I'm gonna put the 10-year. I should probably actually put even the 2-year yield over here. Over here to the left, I've got the dollar index. By the way, the dollar index is just stuck in this very, very tight range, consolidating at the lows, by the way. Just, oh shit, I didn't want to do that. Hold on, let me go back with that. I meant to do this with the dollar index. You can see with the dollar index, we're just consolidating at these lower levels. But the dollar index had the 15-minute chart right here. We have the S&P right here. And let's pull up the data flash from Forex Analytix. Let's grab it right there. I'm going to pull that over so I can go back to the charts. How much time do we have?
A minute.
15 seconds.
15 seconds. All right. So 15 seconds. Here we go. We got jobless claims and we have the Philly Fed. So heads up, here it comes. Let's see if the jobless claims start looking a little weaker. Wouldn't be surprised if they start showing some signs of weakness here. Current account.
Initial jobless claims practically as expected. Continued jobless claims more or less the same.
Philly Fed.
Philly Fed manufacturing a little bit better than expected, but still a lot worse than the previous data point. So all in all, the data came more or less as expected.
I mean, you got to look at this tight labor market still and just say, scratch your head and go, wow. That's all I have to say is,
wow. This is not a tight labor market. It's once again, Blake, that government statistics don't really show reality, right?
I hear it's a frozen. They're using the adjective frozen job market.
Yeah, I've explained.
Not hiring, they're not firing.
I've explained multiple times in the past how we've changed counting jobless people. And how we now count people that have multiple jobs as, multiple employed people in essence. So, and plus this doesn't show the quality of jobs and how many people have actually the jobs that, they're looking to have. So, I mean, the reality in the jobs market is not as rosy as the numbers depict.
Welcome to the gig economy. Everybody's an Uber driver. All right.
Yeah.
Well,
it's bad.
And it all counts as your second and third job. All right, Dale, I'm going to pass it over to you. Steve, good to hear your voice. Ryan, great job on the coverage today. I know you had Michael Brown on, and I know we're all sitting there scratching our head going, why is the sterling down right now? But it is. Why is that, Ryan?
I don't know.
Well, why is that?
You lot selling it again?
Oh no, I mean I'm short sterling, but I mean, why is it?
It was a great pop to sell.
Yeah, I mean,
you were even commenting on it should have been doing better. So your trader intuition was saying, "What a muted response."
Yeah, and how many traders are long just on that vote count, and they're like, "Oh crap, what do I do here?" Anyway, yeah. Here it's again one of those head scratcher type of situations.
Great job, guys. Gonna straighten us out is Rohit.
Yes, one of my favorite technicians on the other side of the world you're going to be talking to. So make sure you all stick around for Rohit. So guys, have a great one. We're going to see you on the Morning Edge in approximately 45 minutes. For those of you that are Forex Analytics subscribers, right at the top here where it says webinar on air, you can see joining whatever show is on. You can join it that way. Check your emails. You got a Zoom invite that's personalized for you. I'll see you guys on that show in 45 minutes. Thanks, Dale.
Yeah,
thanks,
don't stand on a ledge. Get yourself into. Go ahead, Blake.
Huh? Oh, get yourself into the edge. Sorry.
Yeah, ledge.
I didn't know I was supposed to
don't
sing.
Stand
now.
on. Don't stand on a ledge. Get into the morning edge.
There we go. Okay, sorry, I was in.
That's okay.
I'm still slow, man. It's
a real poet
early in the morning.
We'll
real poet.
We'll reherse it. Anyway, have a good one, guys. Thank you, Dream Team.
Bye-bye, Dale.
Steve,
enjoy the interview.
Ryan, Blake, and welcome back, Rohit. How are you, my trading warrior brother?
I'm good. Glad to be back. And
good to have you. You were real right about a lot of things last time. You want to take a victory lap?
There's so much happening, especially the Indian market is turning around. So that's the interesting part.
Yeah. Why is there? So is India a beneficiary of the outflow? Are they repatriating, or did they have much money in the U.S. anyway?
No, so India doesn't have so much of a US exposure, but it just went through a good tactical correction in the big picture. I thought it would be a much longer duration correction, but when we look at sentiment indicators, they have gone to extremely oversold. Everybody's turned
Yes, they
so
are.
bearish that it just became time to have a change, and that change is now shown up. In the last 2 weeks, we've not just rallied, but we've broken past the falling trend line. I think I should, show that on my charts.
Can
But
you?
yeah,
Yeah. Okay. So
so
because we could okay. So
yeah.
we could have a bull market going in the Nifty and a bear market going in the Qs. Can't we?
Yeah, so I think that divergence is what started to become visible from the start of February, which is with Europe. So, on the DAX, I was trying to mark a fifth wave ending. And then what happened is it went to the point where in Elliott waves, we say the third wave cannot be the shortest. A lot of people misread that simple guideline to say, oh, that means the third wave has to be the longest. But it's really that it can't be the shortest. And it's a very good elimination tool. And when the DAX did that, it eliminated, one of my counts. So if I just look, swing it back, and you can see my screen. So you're actually marking this as 1, 2, 3, 4, and thinking, oh, well, that means 5 can end somewhere here. But the third wave, that is this, which we are taking as third, was shorter than the first. So which means that moment you went beyond this point, the wave count changes, and it changes to a much more bullish count.
Bullish. Yeah.
So I change it to 1 to 1 to 3. That simply means this is going to go on for the rest of the year. And that started me thinking that something is different now. This is not a I mean, the whole world falling apart. This is money moving from one part of the world to the other part of the world.
And that doesn't happen every day. I think it's the cycle. I heard someone say 20 or 40 years,
Yeah,
something like this happens.
yeah,
20,
yeah.
I believe it was.
And we've
Was the
become
last
used to
time.
this correlation. We've become so used to the correlation between global markets that we don't anticipate something like this.
Yeah.
But that it happened immediately set my eyes on, well, then what is the reason? And the reason is that Europe had been creating liquidity, cutting interest rates well ahead of the US. China was doing that since October. They started a big stimulus. Their market rallied 50% and then gave back 20-30% of that.
Yeah.
And the same thing India started to do from the last week of January, even though our market did fall in Feb because the sentiment was so poor that people just ignored all the news. But we started to create liquidity. The Reserve Bank of India changed its stance on liquidity by buying bonds. It's announced more bond buying in the month of March also. They cut rates after our annual budget in February itself, and that's now set expectations of 2 more rate cuts into this year. And the government is spending more money. So essentially, we are seeing Europe spending more money, China spending more money, India spending more money, whereas US is saying we'll spend less money. So this sounds to me like a shift in the spending pattern. We essentially
And a
said
shift in liquidity and
in the
growth.
liquidity. Yes.
And growth, right?
Yeah.
Cutting
Yeah.
back, I know it's great. It's, the purpose is to try to get a handle on the deficit, but austerity is a bitch.
But it's good news for everybody else because interest rates come down, the dollar starts to fall, which is good for emerging markets, good for
Yeah,
commodities, good
right.
for the rest. And India didn't turn around immediately, but now in March we've done the turnaround and breakout. So that was the first chart I was seeing. Like India just broke past this falling trend line from the top in October. We just got past that today,
Okay.
and that's setting the stage for now a multi-week or multi-month rally.
Okay. And can we have a bear in the NASDAQ continue with India and Europe, developed and emerging markets, not falling as hard when the S&P is in a downdraft.
Yeah.
They hold
So
up better on
I try to
breaks.
think whether it should be a bear market or should it be a consolidation. So I'm looking at the monthly momentum here. I have my own smooth version of the momentum indicator, which we call the RMI. And these are the last 1, 2, 3, 4, 5. This is the fifth sell signal since 2008 on the monthly. And not everyone results in a deep correction. Some of them are deep downwards, and some of them are just more of a sideways trading range in a 10-12% range. You can go up and down for many months. I'm actually beginning to wonder if this is what you're going to see over here, is a period of time where you might just see a lot of up and down moves while the
And then
momentum
go.
cycle tries to complete itself, and then you'll probably break out of it later. And this is where you'll continue to see outperformance of non-US
Right.
markets for that time period. That's how I am thinking, rather than that this is going to go down sharply because falling yields and a falling dollar. mm, Not sure whether it's, and the reflation in commodities is not exact, and everybody else is spending money, so it's not like it's contraction everywhere. And therefore, I think there's a case that things could be a little more stable. But yeah, there could be more volatility in the US.
I don't know. Everyone's in the pool. Do you really think that 2 weeks is, really most of the decline happened in 2 weeks? Was enough to
For the
unwind
short term, for the
unwind
short
it?
term, yeah,
Yeah.
for the short term, I think probably yes, because if I look at the daily chart, the daily RMI has turned positive on the S&P. If I look at my wave counts here, I've marked this as an ABC correction, possibly some kind of a fourth going on. The RSI got oversold, the RMI turned positive. So I think in the short term, there is a case for a bounce back. So possibly we can attempt something on the upside before we go down again within this broader range, if we say something like that.
All the way up to 62. Okay. All right. I mean, let's see the other hits on the trend line that you have labeled as 4.
Yeah. So I've taken a reverse
All
channel.
right. So, okay. Yeah.
Yeah,
You have
a reverse channel
you
of
have
the high.
one other hit, but it is a reverse channel. Okay. If we take that channel line out, what do you think?
Yeah, then we've
And we're
got to
not
go to
that
the,
far away from taking that channel
yeah.
line.
Then
And you
then
do
then
have a question mark for it to be 4. What's
yeah,
the alternate? What's the alternate if it's not 4? One down?
yeah, then it's ABCX. Then probably the next move up is an X wave because we've done ABC, and that means I'll have to consider. And what I was considering earlier is, have we completed 5? Have we really done that? Because you had an ending diagonal pattern here. An ending
Yeah.
diagonal can end the fifth of something.
Yeah.
If it's a larger fifth, then we go back to at least the fourth wave. But even then, in the short term, I think there should be a retracement, maybe a 50 or 60% retracement in an X wave
And then
before
down.
you get another ABC down.
Okay, got it. All right. I have 59.20, but people are saying I shouldn't expect that kind of a retrace because of, how weak it's been, that 38% may be. We haven't even retraced 38%
So I think
since
what's
last
really
week.
happened, because we're only looking at S&P, what really happened, and you can correct me, is that lot more stocks fell than the main indices, because you had the transports, you have the Russell, a lot of them selling
Yeah.
off much more sharply. And that is well measured in this indicator. This is the number of stocks above the 50-day moving average.
Yeah.
And this had fallen in the very little correction we saw in January into early January. It had already fallen to this point. Around 15% of stocks were only above the 50-day average. And now in this very sharp correction, we haven't really
More are.
gotten down there. So we have sort of a positive divergence developing here,
Okay.
and it just shows that more stocks fell early on. And that's possibly why it doesn't look that bad in the main indices compared to the others.
Okay. Interesting. Thank you, Rohit. Where you at on gold?
Yeah, gold is interesting. I have a long-term chart. No, this is the long-term count on gold. Okay, this is what I've been trying to work with since 2015. That we've possibly, started a impulse wave from down here. The other alternative is I started from here, but if I started from here, so we could be in the fifth, but that's not complete according to me. We're probably in the third wave inside that, which means this may be 1, 2, and 3 is just going on right now. Although we've reached the channel line, it doesn't look like we've completed 5. In fact, it extended because this 1, 2, 3, 4, 5, 6, 7. Now in an extension, you'll do 8 and you'll do 9. So that's quite some leg left before we even say
Yeah.
that, you've done 1, 2, and 3.
Yeah, so we might be in the 4 starting from today.
Yeah, we could be in a
We're pulling back
minor fourth
here.
wave. Minor
Yeah.
fourth.
Yeah. Okay, and you have anything setting up in oil?
Oil is,
Because
oil
I've
is,
been talking about that,
yeah.
that there's going to be some military action. And I guess yesterday President Trump gave Iran a 2-month ultimatum. So, he could say it's about nukes, but, he believes they were trying to assassinate him. So, okay, so the count, I was looking for maybe 62, but
Yeah.
what's this big count? What does it end up manifesting? It can just stay in this range forever?
So,
Or
no, it shouldn't stay in this range. Actually, the ideal situation would be that it breaks this range at some point of time, which is how it capitulates.
okay.
How much below this range will we go is the big question. Will it just be closer to 60 or will we manage to even go into the 50s before we start the recovery?
Right.
Because this is a 5 wave 1. And oil is the only commodity which is not showing an impulse right now. Even copper has started to recover. Aluminium is holding at higher levels. Oil is the odd guy, which is still doing a complex wave 2. So I marked it as WX. Either X ends here or does it end here is my doubt. If it ends here, then it's YX and we are already in Z, or we are still in Y. If we are still in Y, then there'll be another X and a Z. So it'll be quite complex before it's really done.
Okay. How about bonds? TLT. You looking at TLT at all?
Yeah. I have to.
Okay, I know you mean.
So I've marked this rise as ABCX. Okay, so this is a larger 3-wave correction.
Okay.
You'll remember I had started to think whether yields could go up impulsively, but they broke this low. And that means that it can't be an impulse. It has to be 3 waves, which means that this was the first leg of a correction from this peak. And then this was a counter trend move. And now we've started another leg down, which would be another larger A, B, and C. And within that A, we have just done 1, 2, 3, 4, and we got a 5th down. But the
About
4th
a
itself
3%.
might not be complete. So it might take a few days before we can do the 4th. I don't know. It's breaking down right now, so I could be wrong.
Yeah.
Maybe the 4th is done. I thought the 4th would look like a triangle.
Yeah.
So I was trying to make a triangle out here. But yeah, if it starts 5 down, then 5 down could take it to maybe 3.86, somewhere there.
Yeah,
If I just
equality of that first
quality of the
wave.
first wave comes around 3.98 is what
Okay.
it's doing around there.
And equality of the whole wave down, just the whole move from 480 to 410 takes it to 3.5.
Yeah.
Way
Yeah,
down
if it's
there.
an extended 5th, then 3.5.
Okay, how about the dollar, my friend?
So the dollar index
95
also doing
Yeah.
a 4th right now.
Okay, a lot of 4s.
Yeah, and possibly best case if it tests the 20-day average currently at 104 or a little above 104, but the average could come down. So I don't know if it'll go that far, but need to give it some time to complete 4 before it starts 5.
Okay.
I'm surprised that it's not falling along with the bond yields, but
okay, are there any commodity markets besides gold? Anything agriculturally that you're paying
so
attention
copper
to?
is the lead. Copper is the lead. Yeah, some of the
Yeah.
agros are looking good. Copper is the lead in the base metals, which is
Yeah.
breaking out and giving a signal. I'm really waiting for aluminium to join in. It looks like an ascending triangle over here. Multiple higher bottoms along the way, waiting to get past 2732.
Yeah.
And once we do that, then I think aluminum's on its way to around 3000. So that should follow copper eventually.
Yeah. So material stocks.
Yeah, material stocks, absolutely. So in India, we have a lot of metal companies here, some of the biggest aluminum producers. So they are interesting. In agro commodities, I think the big one, of course, has been coffee.
Yeah.
1 second. I think I lost that chart. 1 second.
Sugar is trying to come out of the hole.
Sugar is trying to completely come out. So I like sugar long term.
Yeah.
It's made multiple bottoms around 17 and a half. I think it's setting up for the next wave, which should be quite significant. Because when I look at the long-term chart of sugar, it's even more interesting. You have a really big channel running, from all the way from 2000. This.
Yeah.
And so eventually, I think sugar at some point of time ends up closer to $65. Of course, it takes a lot of time. It's like multi-year.
Right.
It's not something we can expect right away. But we should get the next move started. As this consolidation is almost complete, I think the next leg of this should be getting underway pretty soon.
All right. And
so should the others eventually. I think even
beans.
soybean has been basing for quite a time, quite a while.
All the grains have.
Yeah, all the grains have been basing. They're all basing with triangles.
Yeah, I like the beans. Yeah, that was oil. Wheat's been the weak sister. Corn has already had a pretty good wave out of the hole over the last quarter. Corn, you have it?
No, I have not been tracking corn.
Oh, well, track it. You don't just track the corns on your feet. Look at that move.
Yeah, it's come right out.
Yeah, so that's been leading. And we do have La Nina, and I've seen these currents create weather problems in the summer for the Midwest. So,
but I think in the big picture, it really is signaling the entire commodity cycle starting its third wave, which has been long in the coming. So if we just look at the Bloomberg Commodity Index, where is it? Bloom should have been the Bloomberg Commodity.
Bloomberg took it off. He knew you had a large Coke yesterday. He took it off. He took it off your screen. Yeah. So we have. So let's just say we do have.
It.
All right.
I have it in Meta stock, so should load. I hope. Yeah, here it is.
Yeah. So okay. Oh yeah.
So the Bloomberg Commodity Index, I think hopefully it's done too, but I'm waiting for this breakout on the index to really confirm that we are into the third wave. Once it gets past, this is around 106.8. That's the breakout.
And a weaker dollar is going to be very supportive of this. Well, in dollar terms, you're going to see much higher prices than in other currencies terms. Anyway, best way for people to follow your excellent elite work with Elliott and cycles and show them all the stuff. You have some prop indicators you've developed on your own and a couple of levels of membership for you.
So indiacharts.com, that's the place that I publish. People can simply download the India Charts app as well to get the updates and notifications right on the app. The subscriptions are very well priced. I mean, for a month it goes at 900 rupees, approximately $10 a month is what we look at. And people who are in India and really looking for a data analytics platform, then we've developed something known as Strike. They can simply go to strike.money and find out more about it. It has everything technical, fundamental, derivative data for all stocks and market indicators. Like one of them is on the screen. This is like just like you have CFTC futures data in India, you get the subdivision of positions of all the participants. And this is showing the all-time high long position that domestic institutions and funds have taken on the market at the recent low. So one of the reasons to be bullish, like all the funds have gone
Okay, it's like
super
a
bullish.
COT report.
It's a COT report on the Indian market.
Nice. Okay.
So we've just put it in charts for everybody to use. So this
Okay.
also runs at a similar price of around $8-9 a month to use this platform.
Well, just like everyone, Rohit isn't perfect. Their alternate counts do appear, but he is very hardworking and transparent about when he's wrong. He's been able to say it on the air, and a lot of people choke on those words. So if your interest is in what's happening in India and with what's happening in the world, it looks like we have to be looking east from here where we sit. There's a good guy that could be a watchman for you. So, Rohit, my trading warrior brother, hope you have a great quarter coming up here. And
Thanks a lot. Thanks a lot, Dale.
And
Happy to be here every time.
yeah, and I'll talk to you in June. So
Surely.
go kick some butt.
Yeah.
All right, in the markets, I mean.
Absolutely.
All right. So Rohit Srivastava, coming here for years to edify our community. Want to thank you for doing that, Rohit. Appreciate it.
Thank you. Thank you.
And everyone else, don't forget, don't just count your charts and your indicators, count your blessings. Good luck today, and we'll wrap up the week tomorrow. TGIF. Adios. You could join the team in about 18 minutes on the morning edge. So find your edge. Rohit knows his edge. You guys know mine. You could copy it if you want. Anyway, find your edge. That's your homework assignment. And tell me what it is. Adios, everyone. See you, Ahmed.